Welcome to Shareholder Q&A, a product of Gorecom, in which shareholders are able to ask questions online and then have the CEOs answer them directly with us today. Happy to have him back, and he's probably the best at doing these because I don't know, he's got 5 or 6 of these done at least, if not more. Is Steve McCauley, CEO of Empire Clinics, trades in Canada under CBDT, and for friends in the US under EPWCF, and even for our friends in Europe on Frankfurt under AEC. Normally, if it's a regular beyond the press release, I go through an intro with all the highlights, what the company does. But given the fact this is a shareholder Q&A, 99% of people tuning in are going to be current shareholders who know all that and want to get straight to the Q&A. So a lot of people breathing easier at home saying no intro by George. Great. Steve, how are you, man? Welcome back.
Hey, doing okay. Surviving these tough times in rocky markets like the rest of us on the issuer side. So we're going to persevere like we always do, and we've got definitely got a game plan that we're executing on and a long-term vision. It's just we have to deal with rocky markets.
Well, look, Amazon stock down 33% in the last couple of months. Netflix down 70, Facebook down 50-ish, Shopify down 65. We're in a risk-off environment. You and I have talked about this, but I think it's worth just mentioning quickly. Yeah. So there's not much at times like this, and you and I have seen these before because we're veterans. 1999, 2008, 2015, and now it just happens, right? There's a bit of a catharsis. The key, Steve, is this is when you find out if the emperor's got no clothes, right? Because this is when the real companies survive. And George Calm Widgets, who's been talking a big game, you know, ends up dying because they just didn't have the wherewithal to last through it. So that's what we're going to uncover today. But before I get into the questions, I'm assuming you want to talk to that and your confidence that Empower's got a stable business just going to plow right through.
I mean, as I talk to my fellow board members, who are very experienced, and Anthony Tomasello, he just kind of very pragmatically said, he said, markets go like this sometimes. He said, just don't lose sight of the future and the growth. That's the mission, and that's the journey that you're on. And but we have to be sensitive and empathetic to how it feels when when the stock price is down and when the markets are down, and respect that, demonstrate empathy, and just continue to also show confidence and continue to work on the things that will make a difference going forward. And I feel like we're doing that. And the other thing that I think has to happen is that we, as an organization, we have to also be change agents. If there are areas that we have to adjust and change kind of our approach because of circumstances, then we need to be able to do that, react, be decisive, and move forward, from wherever we might be. So we're assessing, a few different areas that we think, some interesting changes would be beneficial for us, and I think beneficial for our markets.
And by the way, and above all, transparency. Empathy is great, but transparency. So doing things like this. And there are some tough questions. Mike Banning, he's got some tough questions, right? And a whole bunch of other people. I love it. We're here for good times and the tough times, right? So, and I think that transparency, though, is key. We got every question on here. I've grouped them by category. And guys, what I'm going to do, like the first category is going to be about financials. So we got Mike Banning, Paul DeWolf, law student, Breber, Craig Scott, 1500, Akbar Aslam. So all these people have asked. So instead of me going one by one, that's the group of investors who asked this set of questions. So I'm going to go first and start off and just go right through them. Okay, Steve?
Sure, sounds good.
First question. How in the world did you allow financials to be delayed once again? Did you not learn anything from last year?
Well, we learned a lot from last year, and we are disappointed to be in this position. We have a very seasoned and experienced CFO in Jennifer Archibald, and she herself is a former auditor. She's quite shocked and surprised at really being where we are. I think there's a number of factors, but I think the markets in general are really feeling pressure from sort of auditor pressure auditor supply chain. And I think in some cases, resources or the timing of allocating resources. And it just seems to be jumping into so many companies. I've been seeing, more full halts over the last week than I can recall. I've probably seen bulletins, representing at least 20 different issuers, Canadian issuers.
And I've got a number of clients, like you guys, great clients. They got their act together. Management sees trade orders, late filing press releases. And guys, what's happening is it's not the issuers. I mean, I don't want to come down the auditors. Maybe they've got their own legitimate reasons, but the auditors are calling all, I can't tell you how many clients called in the last 10 days saying, George, we just got a call from the auditor. They're not going to make the queue, right? Or they're not going to make the year, whatever the case is going to be. So it's definitely, last year, I think you deserve some lumps you took because, it was good news, double-edged sword. You had the acquisitions and those caused the delays. And, but this year, I'm going to say, I don't think it's the question is, how in the world did you allow financial delayed again? You guys are ready. The auditors are just overwhelmed. They don't have the people, the time. They're just.
Well, I think so. And we had a very big call with them really 1 week before the filing deadline, 4:30, Pacific on that afternoon. I think it was a Monday or a Tuesday, where, it was sort of announced to us that, they're just not going to make it. And, that was an hour-long call that was quite heated. And, we expressed our concern, myself and our counsel was involved, and our CFO, and really just trying to wrap our heads around that news with just a week to go. And then what the heck do we do? Right.
No, they dropped that bomb. The auditors dropped that bomb on a couple of dozen companies I know of. So I just wanted to make sure everyone knew that at home, that this is not an Empower issue. And by the way, we don't want to badmouth the auditors. Omicron hit at the beginning of the year, so things were shut down again, right in January, February. If we remember, it seems like eons ago, but right in January, February, and that caused, there you go, backlog, stack, rack, and then it just gets out of control.
Yeah, we see the labor issues across so many industries. We see it ourselves in our various divisions, and people calling in sick or not being able to fill or backfill spots. I mean, it's sort of industry agnostic at the moment. It's just more of a part of what current business life and environment is all about. So look, we have to just endeavor to get through where we are. I mean, I'm grateful that we did manage to get an approval on an MCTO. It means that the stock continues to trade and everything kind of operates.
Yeah, other companies were too late; they just got halted because they
And I think
able to get that in the time.
We did a good job, and our compassionate plea, for this, worked. It doesn't always. Sometimes it can feel like a bit of a coin toss, really, but we are approved, and so we're just grinding away, constantly to get to the finish line.
Mind you, tongue in cheek, I might say, given what's going on in the macro markets, what's happened the last week, it might have been better if the stock was halted just because what's going on in the macro market in the US, but that's tongue in cheek. Then the next question is, and we pretty much know the answer. Why'd you stick with the same auditor? Will you switch now after another delay? I don't think you can. They're all in the same boat.
Yeah, well, so there's nothing that can be done right now. I mean, we certainly, you have to get to the end, to the finish and the filing, and that's that. We will, like we do each year in advance of our AGM and the completion of our proxy, we will assess where we are, but it's not something I can make a comment on right now.
Yeah. But the answer, again, so I can, and I'll tell you that jumping from one auditor to the other won't do anybody any good. They're all in the same boat. They're all backlogged. They all got labor shortages. There isn't anyone that's really got their act together. So unfortunately, this is something the exchanges and commissions are going to have to address with the auditors separately. Most likely, I bet you they will, but that's all we can say for now on that. So following on with that, then the questions start going into this from financials to what's the company's cash position? Are you planning another private placement soon? And if you did, would it require a reverse split?
So we have no desire or intention of the concept of a reverse split. It's just not something that we discuss at the board or at management level right now. I don't think there's any good reason at this stage. We just have to work through where the market is right now, and we've got a lot of good things that we'll talk about on this interview about why our fundamentals are still really in good shape, and that's what will be the thing that brings us back in the direction that we want to go in. So no on the reverse split at all. Sorry, I just repeat the first part of the question.
And any plans for a private placement? Because Craig Scott 1500, actually, I'm going to follow up with that. Craig Scott 1500 had a really interesting question. He said, you did a couple of PPs in under 2 months. And he says, investors were somewhat understanding because part of those would be used for the 2 clinic group acquisition, but those haven't closed yet. So can you speak to the use of the cash that was raised and and I guess its condition and what you've been using it for in the meantime?
Yeah, I mean, we've got a lot of things that are going on. We certainly invested in the Medi Collective and getting the new locations open and up and running, and getting doctors in place, and medical billings and revenues and cash flow starting to come back in. So that investment is behind us. We've spent that money. It's there, and now it's kind of payback time, right? So we're on that cycle. We certainly invested in the opening of the 3 testing centers here in Vancouver, whether that's staffing, inventory, getting ready. Now that outlay has happened, and the return is happening every day. So we literally swipe credit cards all day, every day, and so we're starting to see that return cash flow. So it's cash flow out, return cash flow back in. So we're certainly pleased with that, and so this is all a function of timing as well. And we have to react to the broader markets, and we have to figure out where we need to be conservative because of the how things have changed and how quickly they've changed. Like, this wasn't a slow, turn. It just sort of fell apart. Broader markets kind of like in a matter of felt like days and weeks.
Well, Russia, Ukraine came out of nowhere, and then that was just the straw that broke the camel's back. And then
totally.
The way things went. Nobody foresaw that. I didn't foresee it for my business, for my portfolio. I don't think anybody foresaw it. So that was and look, that's causing problems everywhere. I mean, if you watch CNBC, you're talking about major SoFi, for the love of God, who's got the naming rights to the big football stadium where the Super Bowl was just played, is down to $4 a share, right? And just because all this has just come out of nowhere. So
that's exactly right. It's exactly right. So it reminds us to be very careful at the moment, very thoughtful. The other issue that we have, with these pending acquisitions is, these transactions are priced on a VWAP, and
just define that for everybody. Volume weighted average price.
What that means. So VWAP, so VWAP, so volume weighted average price, and they're typically priced on a 10-day VWAP. And so what that means is, if we contemplated the transaction at a stock price that was higher, and it has fallen, quite dramatically, it's now getting repriced. The impact for the company and shareholders is extensively more dilution. And, none of us holders particularly like that. So I've got that in my backdrop also, that we have to, consider at this time as we, decide to move forward, with these opportunities.
Well, actually, and let's go to that, because that's a category I've got here: clinics acquisitions and clinics organic. But the questions are, so what's the holdup on closing the clinic acquisitions? Months ago, you said they were just awaiting signatures, which was true. Yep. And then there's a follow-on question that says, should we assume at this point that they won't close, or it didn't work out because the current share price is affecting either or both deals to close?
Yeah, both deals are very similar. The footprint, the size, the valuation, they're very similar. The share price absolutely impacts our timing of these decisions. I'm meeting with both principals groups tomorrow, actually, and we've done the initial due diligence, kind of getting the type of due diligence that's required, particularly the legal due diligence, financial due diligence from the groups, did take longer in getting it back from them than we ever would have thought would. But sometimes that's the case. Not always is the due diligence material organized or readily available in the format that we need as an acquirer. So that definitely was a contributor to sort of timing delays. And then second, over the last few weeks, we're faced with these dramatic adjustments to market. So we have to take a step back and really say, is this going to be right today? Yes or no? Is it something that we should wait 2 weeks? Is it something we should wait 4 weeks? Yes or no? So we've got to have
something you just go back to them and renegotiate and say, hey, George, you know what? We first contemplated this at 40 cents. Now we're sitting around 10. Yeah. Look, you're working at the top. We don't want to give you the bottom. Let's meet somewhere. I'm not giving numbers.
So you've nailed it. That's exactly the type of conversations that need to take place. I don't think this is the forum to really go into it, but when we're assessing where we are and what to do, I'm kind of giving everybody the range of thought process, right? Like, do we do nothing? Do we walk away? Do we attempt to restructure? Do we try to fund it in a different manner? So maybe you don't use as much equity, you actually use non-dilutive debt instruments on the short term until better markets come along, and then kind of take it out with better markets, better valuation. So
is that available? Is debt financing available in this environment right now?
I think that it is. I mean, you've got to remember that these assets generate free cash flow. The assets, in terms of the group of assets, I'm talking about the businesses and the valuable patient rosters, have been around for, each of them been around like 20 years.
They're bankable.
These are not new groups. These are seasoned, large patient rosters in the province of Ontario, with very good market share in the markets that they serve. So, and the fact that they both generate, their own self-sustaining EBITDA becomes one of the key factors for any business lender, in this sort of space.
And by the way, in this category, in addition to the guys that I outlined earlier, there's also Captain Obvious and Eugenius, who actually asked a really good question, and where he says, or he or she says, buy versus build. The time and effort required to go through a private clinic's financial, you just talked about that. The due diligence takes a long time. Getting the deal done takes a long time because, let's face it, they're big operations, but they're run very, we know how private companies are run. They're just, they don't have their whole act together, right? He says it just seems like a different type of obstacle versus the slower ramp up of just building our own clinics. So can you explain how going through acquisitions is preferable to new builds? I don't think it's preferable. I don't think you've ever said it's preferable, but is it worth it, given the amount of time and effort they take to close?
So I think that, fundamentally it's worth it. I mean, the strategy that you want to employ is really a balance of both. We have no shortage of opportunities that call it the organic growth approach. We're in kind of constant conversation with the likes of Rexall and their real estate, division, or people, sorry, the other independent pharmacy groups that we work with. And so, the scenarios have to be right. I know we did 2 relatively recent transactions to, go in with some Rexall facilities, and we couldn't get common ground with the landlord. Like a Rexall as a pharmacy was not the landlord, but the landlord for the complex where these locations were located in, just were not providing the appropriate enough terms, and it would really have put a lot of risk on us that we weren't comfortable accepting, just sort of carte blanche accepting, even though we would have liked the facilities, we liked the locations, we liked the postcodes. We still have to make good decisions because once we sign that bottom line, I mean, these can be 5 and 10-year leases. So, we can't bind the future of the company in a non-prudent fashion. But generally speaking, we still like these organic growth versions. The difference between the acquisitions, if you can pull them off, is it kind of turbocharges, right? You have the ability to kind of make quantum leaps, and that's why we continue to have the conversations and look for targets, and not only build a pipeline, but keep a pipeline at all times, and so that if the markets are right, if the structure is right or needs to be adjusted, you're ready to move and move in the way that we want. Everybody wants to see top line growth and improvement in free cash flow. That's why you use a public company like this as currency, so that you can get quantum movements in growth. Right. And so we still anticipate doing deals. The conversations of this week will be important to see where we land on what is the right approach given all the circumstances that we're dealing with. And it's not just what we're dealing with. As we started off the conversation, virtually every company, every issuer out there are faced with adjustments, changes. Maybe some are faced with headcount reductions, so on and so forth. I mean, these are the markets that we're in today. They won't last forever, but they certainly are in front of us today.
Hey, heck, you got some big research outfits out of the U.S. thinking that that Elon Musk might negotiate a better price for Tesla because at $54 share price, $54.20, that looks kind of expensive right now. So things do change, right? And they change pretty quickly. A month ago, you thought slam dunk, $54.20 done deal. Now there are rumors going around that he may go back to Twitter and say, "Hey, if I pull out, you're a $20 stock. So, let's get the deal done at 35 or something like that." So the bottom line is there are some seismic shifts taking place, but you're on top of it. You guys are still in the game. The acquisition is still in play. It's just finding a different way to skin the cat at the end of the day.
Potentially, yeah, exactly.
Right. Let's go to the organic side of the clinics now. So the general state of questions there is what's the status of other clinics build outs? What does the pipeline look like? And specifically, what can investors expect to see for total open clinics by the end of the year? A range would be helpful, quote unquote. If you got a range and if you got any sense for how that looks right now.
Yeah, so on the organic side, we've got the 8 physical locations that are open. A big part of the work right now is really rostering patients. We've really found really pleasantly surprised at how much interest there has been in London, Ontario, as an example. Kitchener is another one. Where London, I believe, they've literally got 1,000 patients that they're rostering right now. And that group of doctors are in a position where they literally can't take any more patients at this point in time because there's been so much demand for this new health center and for our brand. So I'm thrilled for them in that market, and I'm thrilled for the Medi Collective and the team, the leadership team there with Carolyn and Jordan and Aviv are really helping support and work through that. Kitchener, the same thing. They've just hit. I think the number was 600 patients to roster, and it just takes time to get them on and get them into that the patients into the cycle. The other thing that's taking place is.
But they're coming, right? Sounds like
they're coming. This is it. They're coming.
That's the important. That's searching for them.
Yeah, and so some other things that they're doing, and this is all on the organic side. Like, what are we doing, with the existing network of clinics, and then I'll touch on, the kind of go forward. So take the Etobicoke market where we have two locations there, and we have the big flagship one on Lakeshore. There was a big marketing drop recently where they did a big 30,000 household mail drop. They've upped their social media activities, again, all to really accelerate rostering patients for what should be a very good market, being Etobicoke. And the other thing we're really pushing hard on now is utilizing the paramedical services where the footprints make sense. So we're seeing now podiatry services start to come online, orthotics and orthotics kiosks coming online. It's a good and valuable service to have, and can be very nice as a long-term revenue driver in all of the clinics. And then really, additionally, another one that they're pushing for are braces. So think of wrist braces, knee braces, elbow braces. These again are really important medical devices and really products for patients, and they tend to have very good coverage through the medical insurance programs that people have through their employers. And then finally, it's accelerating the work on chiropractic services and massage therapy services. So the model again needs both the primary care and the paramedical services, all ticking, because particularly the paramedical services, they tend to be quite a bit more profitable and generate more free cash flow as a result. So we've always stated that we want to see those services really running well in the locations.
What's the biggest hurdle to profitability for existing clinics? And do you think you'd be in a position, because it kind of dovetails what you just said, where you can eventually provide clinic metrics just to help instill confidence with shareholders? Like, every once in a while talk about number of patients that have been rostered, capacity, things like that, or any KPIs that you might think might be valuable to shareholders. Do you think that's something you might be able to share?
It is. It kind of almost starts to fall into the conversation of getting research or analyst coverage, right? And is really identifying what are these key drivers for each of the divisions that we have, and how can we talk about them in a compliant manner, right? Because that's always our juggling act, is how do we remain compliant with securities law and guidelines, yet still provide enough information about how things are going, or as you say, guidance. So I would expect as we're sort of stabilizing, particularly with those openings of the MediCollective and these new patients coming in, those are going to be good topics to kind of talk about. And it's why we put them into the updates of last week, is because these are sort of factual things that are taking place now, that we've got the build outs behind us. We're getting doctors in place. We're adding paramedical services. So we can talk about how it's impacting bringing patients on board. And we know at least in the MediCollective that, having physical patients in the roster are a precursor to revenues and revenue growth.
Just adjusting my stopwatch for you. CERES. Let's move on to that now.
CERES, yes.
Next category. Craig Scott, 1500, Paul DeWolf, Eugenius. So they all contributed in this section here.
Yeah.
Can we expect to see a CERES update sometime this summer? And once you have some data and trends to share, perhaps you can provide something regular, like monthly updates, for example.
Yeah, I think it's going to be one that we actually can talk about, I think, on a fairly regular basis. Everybody needs to know we are just at the very beginning of this. Even though we did all our accreditation work in late March and early April, we got our 3 sites fully accredited by the College of Physicians and Surgeons in British Columbia. And it's no small undertaking. British Columbia is a regulated province for these services. And, as a public company and just by the way that we operate, we need to do it by the book and demonstrate that. We just can't be perceived as cutting corners. And I know we're starting to see or hear of some other groups that may not have got their accreditation. So it'll be interesting to see where that kind of goes in the next little while. But everybody should please keep in mind that when you look at the entire season ahead of us, we haven't even seen 1% of the passenger count arrive yet. It was going to take until early May before we start to see volumes of ships start to come in, where they start to come in every single day. They come in multiple ships each day. And then as you get into the summer, you see 2 ships a day, then you see 3 ships. And then in some cases, we even see 4 ships because we have the passenger manifest and the ship count. So, I'm pretty much down there every day. If I'm in town on the weekends, I'm down on Saturday, I'm down on Sunday, walking to the port, going to Hull C, that has opened up now. The Fairmont waterfront is the main location. And, the team are really organized. They're comfortable. They've really got some precision now in providing these services far before, all the big volume starts to show up. And that's the key here, right? Like our operations can't fall apart. But I think we could, I'll be interested to, look at how our daily counts are increasing, or counts over, weekly, or counts over, sort of monthly, as we move through May and June and into the summer when it gets real busy. And again, those are really, they're obviously factual indicators of future revenues, because there's no medical billing associated with what we do. This is all what we refer to, loosely as cash pay. Yeah. So it's credit card, and in some cases there is cash, but that's a small percentage of the method of payment. But it's all credit card swipes, whether it's online in advance or it's on site the day of. We are receiving those funds. The funds process within basically about 1 to 2 business days, and so it's really nice to see the inflow of funds now, given the investments that we made and purchasing inventory and hiring staff and doing accreditations. It's really nice to see, those funds come back in.
Question follow-up to that is, with Washington discussing the possibility of removing COVID test requirements for entry into the U.S. in the next few weeks, is it possible that much of the potential for disembarking testing will disappear?
It really depends a good bit, frankly, on the cruise line, because some of the cruise lines are requiring disembarking testing.
Okay. Why is that?
You know what? They're just, we know of some cruise lines that are testing their passengers every day while on the cruise itself. So there's different policies for different cruise lines. We follow, the scenario closely. We do know that the cruise line industry is uniquely concerned about a breakout. And so the only way for them to have a level of control or certainty over breakouts when you've got potentially thousands of people on one vessel for a week at a time is they've got to do, testing in advance within the 24 hours of departure. And in some cases, they're doing it regularly. In some cases, when they get off. At this stage, we'll monitor it. We're, ideally positioned with our ability as the only provider to have an accredited operation, on the Port of Vancouver with Canada Place and what they call a cause testing site down below on the port. So, we're well positioned to capture, that returning traveler, of which 75% of the passengers are American.
By the way, sorry, just had to take a sip of water there. If this happens where Washington maybe removes test requirements for entry, do you have any sense of, because you got your thumb on this kind of stuff, do you have any sense for when that might become effective? In other words, if it becomes effective August, then you get a big chunk of the season already done anyways.
Yeah. I think they all, look, I'm not in a position to, figure out exactly, what the Biden administration decisions will be and when.
Oh no, I know. Just in case maybe there have been some indications. I don't know, because I haven't.
No, there's nothing. There's no steadfast, strong, firm indicators yet. I think it's just a policy conversation. I think it's a bit of a political juggernaut, unfortunately, in the U.S. And the B1A2 subvariant is increasing. Hospitalization rates are going up just about everywhere in the United States right now. Obviously, that's going to be a big factor in any form of policy decision like that.
Yeah.
And we're seeing a lot more talk about the additional boosters now. Fourth booster shots are sort of available now in Canada to certain categories. And the same thing is happening in the US. So, it really just doesn't feel like we're going to be living without this in any form. And then again, going back to the cruise ship industry, it has a unique proposition that it needs to address. None of the cruise lines can afford any PR challenges related to break.
Yeah, they want to know if George got off this ship, he was clean, he was negative. So if he contracted COVID 2 weeks later or 10 days later, he got it somewhere else. They need to be able to control that, right? Otherwise,
they absolutely.
They got to control that. And I'm going to throw in my 2 cents, which is, I think the Biden administration's not going to pull the requirement for entry to the U.S. The midterms are coming up. Yeah. There's already the concern of a next wave. I just don't see how politically they do that. They're already getting flack for the masks, right? If they stop testing people coming in, I think they're going to lose their base. So anyways, that's my 2 cents for whatever that's worth.
Yeah, we follow it closely.
Next category is MediSure.
Yeah.
And we've got Empower Investor, Colin, Eugenius in this category here. With MediSure seeming to be performing so well, how much of our future revenue do you feel can come from the distribution of various products versus the clinic revenue? So do you think that, in other words, the bottom line question is, do you think that products could contribute as much top line revenue as clinics at some point in the near future?
I think it has the potential. It's not in that position today. We're incredibly thrilled at the work that the MediSure team are doing. We really have watched them just, really do miraculous work with Health Canada in getting the vitamin D test to market. It's given them a framework now to bring behind that a whole series of these types of products, very similar in category, but serving different test protocols. So whether it's, iron deficiency or some of the sexually transmitted disease states that can be, tests can be performed, privately at home for preliminary screening. So there's probably 30 of those product categories deep in the, on our list. Realistically, it probably feels like, 6 to 10 of those would be force ranked as a priority. And the team of scientists and compliance guys at MediSure are working through, that list and that product development cycle. So there'll be more updates that we'll provide in the not too distant future on what the next, probably 2 or 3 will be. We've got some pretty good line of sight of that. The other thing that's going to be important for MediSure is its ability to shift into the United States. And I think that that's something that we're going to be in a position to talk about here, again, in the not too distant future. We always felt that if MediSure and the brand that it has, and I really like that brand. I really think it stands for something, and all of the new brand guidelines, whether it's from website to social media to packaging, I'm really proud of the result that the team have put together. And, I've really got a vision of, you walk into your local pharmacy, your local postcode and zip code, and you see MediSure on the shelves behind the pharmacy counter. You see MediSure on the shelves in front of the pharmacy counter, down the aisles where the supplements are. And it becomes a brand that's got consumer awareness and building consumer awareness. If we can get MediSure to the United States and start to gain FDA status on these various products, you're getting to the big markets now, where, you get 10 times larger market. We like the same sort of style of distribution, which is either directly off our website or in partnership, with pharmacy networks across the country. And of course, in the US, there's, like I say, 40, I don't even know, 140,000, pharmacies versus 14,000 pharmacies, in Canada.
10x. It's always 10x.
Yeah. So
I'd ask to drill down
the revenue
more.
question.
I'd try and drill down more, but it sounds like you're going to have more to say about that officially in the next couple of weeks or a few weeks.
Yeah, very, very, very near. We've been working hard on it because we know. I mean, the team had to focus on getting the vitamin D product to market, getting that inventory in, getting it out. They've been doing a really nice job on that, actually. And then it's the pipeline. And so, it's really, it kind of is all they can sort of do to manage their current new diabetes products that are coming in. We've got our Health Canada pending approval for the rapid antigen test kit, which the updates behind that are actually very good. They've had a lot of very positive recent conversations with Health Canada on that topic. So again, we're going to keep our fingers crossed, everybody, on that, that we hear something on a positive outcome very soon.
Well, I got a question on that. Empower Investor and Paul DeWolf are both asking, how come MediSure's application isn't appearing on Health Canada's list of pending applications, so online?
So
I can't confirm that or not, but it's seeing as a question, so I'm assuming.
Yeah. I don't think that I particularly may know the answer right now. I know that there was with Health Canada, and this is actually with Health Canada's recommendation, it was submitted. They were doing some of the diligence work, which basically is providing backup information on the clinical studies that support the efficacy and accuracy of the test product itself. Health Canada actually recommended, take the application down, get that information filled back in, and then push it back up again. And
but it's going well. Like, in other words, was that a big hurdle there, or?
No, I mean, it could be a big hurdle for some, but I tell you what, the MediSure team are on it. I mean, it's one of the areas that we identified so early as such a key strength. And if we could leverage that, then I felt that we could leverage the brand parlay it into something more diverse. I happened to talk to Mario this morning and got some updates on a couple of these items. And the things are going well with Health Canada on those topics. They have a tremendous reputation with Health Canada that's been built up over a decade. And they're frankly just good at it. And we're going to take that same approach and skill set. We've got a very good FDA consultant in the US, and we've got a game plan on how to leverage, our assets and divisions to really speed up, this movement into the US markets with the MediSure brand.
And that's a perfect transition into our Kai Labs discussion, one acquisition to the other, but specifically, Craig Scott asked a really interesting question based on what you're saying, and now it makes more sense. He says, where do you see Kai a year from now? Are there any thoughts of moving on from this pillar since it's been underperforming and maybe transitioning into a MediSure DC, which I'm assuming is distribution center, for when Empower expands to the US?
So, I mean, well done. It's a great observation and a good point. I just sort of alluded to everybody, some of our thought process here. We have not been happy with the laboratory division and its underperformance of late. We elected to make a change in direction, and we elected to reduce some costs down there by having some headcount reductions go through, because there's no reason to keep a payroll count that's not matching revenues coming in. So we're making the difficult decisions. We're executing on the difficult decisions because it's the right thing to do. And we've got interim leadership in place right now. Really working through what's the best use of those assets and that category, and where are laboratory services going in the future? Where is the investment in laboratory services going? And I can tell you that at-home testing products are a growth engine. We're seeing broader investment in this sector, which is always comforting when you see, venture capital coming into a sector, when you see major players putting more investment into the sector. It means that the general thesis of where the segment will be going in the future is validated. It's just not my opinion or someone else on my team's opinion. It's validation from a lot of other bright people that are putting their money down. And we've done the same thing. We did it with MediSure. I think it was a very good investment, and we're so incredibly pleased with how it's gone. And we think that the market and frankly consumers, want and need more control over their own healthcare outcomes. And this is one of the methods where you really speed up decisioning, you speed up diagnostics, you make it less expensive on the entire healthcare ecosystem. You want to get if there are 30 different types of lab requisitions or lab, test types that can be administered at home, you're dramatically improving the healthcare ecosystem, right? And so I think that's going to be a very important role for our company going forward. And it's going to be very important for, our growth channels in the future. We need to demonstrate that we can have strong, sustainable revenues and cash flows coming from U.S. operations. It's going to be really mission critical, for the future.
Mike Banning asked, kind of dovetailing into what you're saying about halfway through that answer there, is how could you have been so wrong about Yoshi? Who exactly is running Kai right now?
So I'm not going to comment on an individual. It's really not appropriate. And it's not appropriate in this forum, and it's not appropriate really in any conversation externally, and barely even internally, frankly. So respectfully, Mike, I have to sort of shy away from that direct question.
Yeah, understandable. Sure.
Yeah. With
but who is running now?
Okay, so to answer your question about what's interim leadership look like. So Tenzin, my chief of staff, who's with me in the corporate office here in Vancouver, has taken over the helm right now, or the reins, on an interim basis. I've tapped into my network in the Dallas-Fort Worth market, into his. We've leveraged our good board members and their extensive healthcare network. And we've got some really talented people looking at what we're doing with this great state-of-the-art laboratory and laboratory services. And what should our laboratory services look like going forward? We are open to listening. We're open to change. We're open to welcome, perhaps there's other new services that we should be running through the 6,000 square feet that we have in that Dallas location, which is literally in the heart of the Dallas medical community. I've had conversations with the chair of University of Texas Southwestern Hospital, who's a very warm referral from our good board member Anthony Tomasello. So
that's a nice referral to have.
Yeah, and so we have to leverage our network and simply not accept underperformance. We just can't. And there's too much at stake here. And if that means that we have to adjust it or change it to get it right, then we're prepared to do that. And prepared, as always, to take on the tough decisions if we have to, roll up our sleeves, work it harder than anybody else does, and figure out how to get laboratory services right. And that may include, driving MediSure, down through it, because that becomes the right decision. So, this is all on the table for us as we, attempt to get it right and navigate, the markets that we're in right now.
And look, the best companies, the best sports teams don't get the perfect game plan set right out every single time. The best teams adjust at halftime, right? The best companies adjust at halftime. So, for whatever reason, Kai didn't go according to plan, you're making the adjustments.
Yeah, we have to. We have to. Look, we have to be.
We'll hear more about what the adjusted plan is going to be.
Yeah, exactly. And it's not going to take us too long to, be in a position to talk about it. And, we have to be change agents. I go back to my, GE days with Jack Welch, and, it was ingrained in us, the ability to be flexible, nimble, and to be
Pivot.
change agents.
Pivot.
And if that means that you have to adjust course because it's not working, or you don't think long term is going to work, then be prepared to do that. And so, myself and my entire team and board are very supportive of the work that we're doing, the actions that we've taken, and where we will go with this.
Yeah, and by the way, side note, but for everybody home, there's a fantastic documentary on Netflix called the Defiant Ones. It's a 4-part documentary about the music industry from the 70s, 80s, right up until Apple Music, and the constant readjustment that the winners in the music industry had to make with every new technological advance, right? But the winners adjusted, pivoted, adapted, and kept on winning. So that's, so Empower, nobody, Agoracom's not immune to that. Empower's not immune to that.
Sure.
Bottom line is,
well, and look where we came from and the legacy assets, that no longer exist. And I think we're ultimately better for it. This desire to adjust and change into pure play, what we call pure play healthcare, brought about MediSure and Mario Cortez and his brother, and look what they've done in such a short period of time. And so that kind of willingness to go and seek change if it's required, I think will hold us in steadfast for the future. And I'm not afraid of it personally. And I don't want any of our team members to be afraid of it. I want to demonstrate that, we will do the hard work and fight to get this business where we want it to go. It's not perfect every single day, every single week, every single month. I mean, if you do a job like I do, frankly, every day is just troubleshooting, solving problems, working through things, right? It's not glamorous. I can't always have interviews with you, George, right?
Hey, look, if you were, then you wouldn't be solving the problems. But you're totally right. Every company goes through this.
You bet.
Sometimes we think from the outside, oh, ABC Widgets, Acme Fireworks, from the Roadrunner days, is just a perfect company. It just it's not that way.
It's
costing something.
It's not reality.
You're making an adjustment on Kai, for example, but the clinics are going great. CERES is going great. MediSure is going great. They're moving, and sometimes part of the game plan has to be adjusted. I think that's fine.
Yeah, totally. I mean, yeah, you can take, gosh, again, I remember my days at GE, and at the time we were the largest company in the world, and there was divisions all over the place, and you got some are up, some are down, some are flat, and again, we hope and pray that every division is knocking it out of the park at all times, but they're moving in different phases at different times, and some get more investment at different times than others, and there's impacts, right? So we've made a lot of strides over the last 4 weeks down in Dallas. I think that we're going to be in a good position with it in the very near term, and we'll have it in good hands, and with a more concrete kind of clear use of those assets as we look out into sort of laboratory services going forward.
Next and last category is just kind of miscellaneous, but has to do with the listing of the company. That's the symbols thing. So I'll just get straight to it. So sure. Paul DeWolf, Breber, Empower Investor are all in on this one. Brian for Breber. I'll ask the easiest question first, maybe. Sure. Why are you not changing a ticker symbol yet?
So what I can tell you about that is I have already reserved a new ticker symbol. So now it's just timing. It is not appropriate to attempt to make that sort of change on our Canadian listing until such time as we finish the audit. Changing a ticker symbol is frankly kind of one of the easiest things you can do as a public company. So I already took it upon myself a few weeks back to what you do is you pre-reserve an available ticker symbol, and that is then allocated to you. There's no cost to do that reservation, and you can keep upping that reservation for up to a year. But this is not going to take a year. This is something that we know that it's the right thing to do. Again, it's moving away from legacy assets or legacy impression, and it's small, but optically, as we continue to try to seek new followers and attract new retail investors and institutional investors, we feel that might leave a connotation or impression with someone, and there's no reason for us to have it there. So that's kind of where that's going. Of course, when it's ready and we have a date, then we announce it, and then I believe it only takes 2 business days from announcement date for it actually to be updated on the boards.
Okay. And then the follow-up question from the group is not that they're working in concert, but they all kind of were asking the same thing. Is you brought up NASDAQ before, yet in these trying times, we're quite a ways from meeting the list requirements.
You bet.
Do you have a NASDAQ plan, and would you consider a cheaper and more obtainable TSX uplist while you try and build the company towards NASDAQ?
Yeah, you know what? We've had a lot of conversation about that internally, and really, the question internally is, do you take an interim step and make a shift from the CSE to, say, TSX or TSXV, whatever the case may be? And does that get you better visibility, different visibility, greater access to investment banks? And then does that make it easier, for that next level when you're ready? And really, the short answer for us is there really isn't much benefit to it. We are, well, in 2021, we were the 4th most traded stock on the CSE. In 2020, we were the 5th most traded stock on the CSE. So we've got liquidity and visibility already in place. So would we gain any more by going through that work, expense, and so forth? And I think the conclusion is no. Do we gain more visibility or following, or does it open doors with investment banks in a way that's greater than where we are today? And the answer is no, because we already have those relationships. They're out there. We've been building them for years. Does it change our influence to connect with institutional investors in New York? Well, the answer is no, because we've got those relationships. We've done that good quality work, and we continue to maintain those relationships. So the conclusion has kind of become, why go through the time, money, aggravation of this interim when there's nothing to indicate to us that it will be even marginally beneficial? And it would have to be, the conclusion would have to be, it would be, monumentally better for us. But again, there's no indicators. As I've socialized it with other key leadership members and directors, the consensus remains the same.
Last question comes from Colin, who said, and we've answered this part. You've brought this new team together of people. Are you guys collaborating, refining on a new type of game plan towards driving the company's objectives? I think all the answers you've given today, clearly that's, because you've said a few times, we talked about this, we've talked about that. So I think we've answered that part. But then Colin goes on to ask, how much confidence has bringing these leaders together under your team brought to Empower?
Referring to leadership team members,
or
exactly,
the leadership
team. I mean, I think I've said it a few times previously when we've talked, George, over the last 12 to 18 months. We've had gaps in our organization, right? Just like every developing company, and we've been slowly picking away at these key gaps and putting what I feel are very talented people into these roles. And when these talented people come in, we feel the impact right away. But we're not all the way there, and it's, going back to our laboratory division.
You're never all the way there. I don't care who you are.
We felt it required a change. So we need to identify new talent to go into some of these key spots, and we're going to do it. And I'm quite comfortable or confident that when the new talent, takes the reins in these key operational roles, that we're going to see, immediate impact and improvement. And we've seen that with all of the, the key people that are really in leadership, whether it's corporate staff, my chief of staff, and the good work that Tamara is doing on the CERES relationship, to just watching how much capacity someone like Jennifer Archibald has. It's just quite phenomenal, actually. So, and then, we're so thrilled with Carolyn Shields coming into the Medi Collective and bringing her many years of experience. We're really seeing and feeling the impact of that right away. The acquisition of MediSure and having the leadership of Mario, and then watching Mario hire some very interesting key talent to help support all of the work that they're doing. They're going after their ISO certifications. They're doing great things with Health Canada, and they're setting themselves up now for, to be an FDA player. So, I'm pretty darn proud of, the talent that we've been able to bring, or I'll call it attract. Let's call it attract. And it's made us a better company. It's made me better. I really enjoy our team and our culture and our teammates. And I'm just looking forward to continuing to, work hard every day to make this succeed, whatever that looks like.
And by the way, something I mentioned at the opening when I was talking to a couple people there, I said something else that this team that you've now achieved is you significantly de-risk the company from being all Steve. 18, 24 months ago, knock on wood, if something happened to you, right, that's it. It's over. There's this,
yeah.
But knock on wood, if something happens, whatever.
It's a really good point. And
there's a whole structure.
There was a whole structure that was I had to put in place, given where we were on resources and challenges, controls that had to be in place, and then bringing in additional board members, bringing in the likes of Jennifer on the CFO side. And you're totally right.
That's
so
big.
We've opened up controls within reasons. We've opened up signing authorities to help streamline how something as simple as cutting a check and signing that check gets done. How our payables are dealt with, and having redundancies for me. And then another thing that's very important is making sure that I'm not a bottleneck. And because that's another that slows down the organization. If 100% of all contracts or all decisions, have to run up through the divisions, through to me, then back down, that doesn't make sense. So, Jennifer's really started to put in place some better hierarchy for decision-making and approvals. And these are the things that, growing organizations need to do. And we're doing that, but there's more. We've got more work to do, but it's certainly much better today where we sit than where we were at the beginning of the year.
And Colin's actually, I know we kind of asked this a couple of times and for different specific parts, but where do you think the company's at year end, a year or a year from now?
Oh gosh, it's such a broad question, right?
Yeah, I think it's almost too difficult to answer.
It's super difficult to sort of talk about. I mean, I still continue to be, optimistic and bullish on where we're going with our testing programs here. Coincidentally, this morning, we ran a fourth accreditation process. And what we're doing, given that we've gained so much credibility with with the certification committee, we've decided that we want to offer mobile testing services. And this is coming based on demand. We've had a number of our cruise ship companies have come to us and asked us to go to locations that they've designated for their travelers. We've had tour companies do the same thing. They want to keep their cohort together and have requested, can we go to them? So this accreditation process that we went through this morning will enable us to go out. So think of hotel programs, think of film and television programs, think of travel programs, tour companies, whatever it might be. And it's just another way to be flexible, to open up additional markets, leveraging all the investment that we've already put through. So I think this one's going to be quite interesting for us as well. So that was literally this morning. We did that accreditation session.
I also want to thank everyone, because there's one last excerpt we're going to take out of the submissions. But I want to thank all the shareholders, because while they asked all these questions, Steve, I left out a lot of the pleasantries, but there was a lot of, Steve, thanks for doing this. Thank you very much for answering these questions. So it's great that everyone at home asked really tough questions, but were gracious about it. So I want to say thanks to them. But Akbar Aslam probably had the nicest thing. He said, or she, but they said, "Hi, George, you are the GOAT. Steve, you are handsome and well-spoken." Right? Which is a great preamble. And then went on to ask a couple of questions that we've talked about, because I've mentioned them because there are groups of others. But they did have one great question, which is I didn't get to. Why are insiders not buying up shares at low prices?
Well, I'm on a blackout officially. So I'm literally barred from buying or selling our securities. And so are all of our other registered insiders.
And that's because the delayed finance, everyone should realize.
Well, I mean, it's twofold. Even if the financials weren't delayed, effectively, in this window of time from January 1st to April 30th, we're effectively on a complete blackout.
Oh, okay. How come?
Securities law, because the financials we're going through audit and the financials are pending. And so in that time period, registered insiders are officially on a blackout. And then it gets extended for the registered insiders right now because of the MCTO. And so we're literally cannot. So, I'm not a seller at all, but we can't sell, we can't buy, we can't do anything.
No, and that part I knew, but then you also said that even if the financials had been filed, you'd still be in blackout.
No.
I thought that's what you said. My apologies.
No. What I meant is while the financials were being prepared in the window of time between January 1st to the filing date, let's call it April 30th, that's an official blackout, right? And so if I believe the rule is 2 business days after filing, the blackout gets removed. And then, registered insiders would be allowed to purchase. Like as an example, even if if there was a financing, I'm not allowed to participate in the financing because of the blackout rules.
Right. Okay. So thanks everyone. And Akbar, thanks for that great, a great way to kind of end it off on a nice note like that. But thanks to everyone at home for fantastic questions, tough questions, fair questions, very probative questions. They're great. And what I really liked about them is very mature questions. They weren't panic questions about the market, but very mature questions about different parts of the business. So sure. I think that's a credit to you, Steve, because it's clear the shareholders understand the different aspects of the company well enough to ask smart questions. So last word to you before we sign off.
Yeah, I think it's just a big thank you to all our followers. No one is happy, seeing, a stock price the way that it is. I certainly don't like it as an individual shareholder. And, it makes our life as an operator more challenging. We'll get through it. We'll figure it out. But I think, I just have gratitude to our followers. I've felt frustration. I've, had the frustration thrown on me, but it is part of the territory. And again, I understand, I empathize, I respect it. I try to respond when and where I can. I can't always respond, unfortunately. So a forum like this, George, is very healthy, I believe. I still continue to be committed to, shoot videos, talk when I can talk, communicate when I can communicate. And, this too will pass. We'll get through this. But we'll continue on our journey with our business model, and I look for updates in the near future.
Thanks, Steve. Always enjoy it. We went about an hour and 10 minutes, and the whole time, no fluff, great information. Really appreciate it. I think I speak on behalf of all shareholders when they say this is really appreciated. So have a great day. Can't wait to have you back on the next couple of weeks.
All right. Thanks so much, George. Bye for now.
Everybody at home, thank you. Have a great night.
Hey guys, this video is over, but don't forget to help your company by liking it and even leaving a comment below. And then don't forget to help yourself by subscribing to our channel and never missing another great Agoracom small cap video.